Stimulus checks and low interest rates have led to a surge in demand for new and used cars, resulting in Americans owning $1.52 trillion in car loans. The car market experienced a significant shift during the pandemic, with most OEMs canceling semiconductor orders in 2020. With limited spending options during lockdowns, people turned to purchasing new vehicles. In 2019, 17 million vehicles were sold according to J.P. Morgan. Predictions show that 14 to 14.5 million U.S. light vehicle sales are expected in 2023, which is lower than pre-pandemic levels. Labor shortages and supply chain issues continue to be a challenge for automakers. The Russia-Ukraine war caused additional trouble in industries such as metals, chemicals, and energy. Individuals aim to spend $49,075 on a new car in December, but some opt for used cars due to high prices. Car prices increased by 4.2% YoY in January 2023. J.P. Morgan predicted a 24% decrease in car production costs this year, but non-commodity factors like labor and energy still impact profit margins. SUVs and luxury vehicles saw a 16.6% and 15.2% price drop, respectively. J.P. Morgan predicts a 2 to 5% decrease in new car prices and a 10% decrease in used car prices by 2023. The average listing price for used cars is currently $28,537. Despite this, consumers are still spending more than pre-COVID-19. In the era of free money, dealers sold used cars above MSRP rates due to high demand. This created a bubble, with prices artificially high. The auto industry is cyclical and may be entering a down cycle due to fears of a prolonged recession. As most car purchases are made with credit, the situation for borrowers is worsening monthly. Higher interest rates from the Fed are reducing people's buying power, leading to a decrease in demand for vehicles. J.P. Morgan reports that new vehicle loan rates rose to an average of 6.79% in January. Average monthly payments for used cars in the U.S. increased by 11.2%, while new cars saw a 13.3% increase and leased cars increased by 12.1%. Even used cars have an average monthly payment of $525. JPMorgan's Ryan Brinkman says 80% of Americans who finance or lease their vehicle may not experience any relief. A 100 BP rise in interest rates can increase monthly costs by around $20, which adds up significantly over a 72-month loan period, resulting in borrowers paying more than their car is worth. Used car prices have decreased by 1.42% monthly on a wholesale level, leading to a potential market crash. Carvana's acquisition of Adisa in 2022 and high debt load may cause the company to go out of business, with only $434 million in cash and large loans. This crash could have a significant impact on the auto industry, similar to the Lehman Brothers bankruptcy. New car models are arriving, so dealers are discounting previous year's vehicles. Tyson from J.D. Power predicts an increase in inventory, leading to lower prices. CarMax had poor Q3 results in December 2022. The Manheim Used Vehicle Value Index predicts a 4.3% YoY decrease in car prices in December. Those who recently purchased cars may struggle to sell them for a fair price. JPMorgan's Ryan Brinkman suggests the road to recovery may be slower than expected.